Hello. Global stock markets are down today following further inflation data released early this morning and escalating geopolitical tensions. French annual CPI for September came in at 4.9%, while it came in at 3.5% in Spain. Though these figures were in line with expectations, they are still considerably above the European Central Bank's target, suggesting interest rates will stay elevated for a while. Elsewhere, the conflict in the Middle East looks set to intensify as all civilians of Gaza City were called to relocate south within 24 hours. Oil prices jumped up today after the U.S. tightened its sanctioning against Russian crude exports, heightening supply concerns. The U.S. yesterday imposed sanctions on owners of tankers carrying Russian oil priced above $60 a barrel in order to block loopholes in the mechanism designed to penalize Moscow for its invasion of Ukraine. Despite extreme volatility throughout the week, both Brent and WTI crude are set for weekly gains, mostly driven by potential disruptions stemming from the Middle Eastern conflict. The Competition and Markets Authority has finally cleared Microsoft's acquisition of Activision Blizzard, paving the way for the deal to close by October 18th. The $69 billion deal was first announced in early 2022, but was blocked due to concerns regarding anti-competitive nature of the takeover. The deal was approved following Activision's agreement to sell its streaming rights to Ubisoft Entertainment, which effectively blocks Microsoft from making Activision's lucrative titles exclusive on its own services. The third quarter earnings season is picking up momentum with the release of financials from high-cap companies. United Health today reported $6.56 earnings per share, beating expectations of $6.33 and revenue of $92.4 billion, also above the $91.42 billion forecast. The medical costs were lower than expected for the healthcare conglomerate during the quarter, slightly lowering the company's medical loss ratio. United Health has raised its full-year profit outlook, which is also above what analysts had been expecting. JP Morgan also released third-quarter earnings today, reporting profit of $4.33 per share, crushing the estimate of $3.89 and revenue of $40.7 billion versus the forecast of $39.55 billion. Financials for Wells Fargo came in positively as well, with the company posting $1.48 EPS on $20.86 billion revenue, beating expectations of $3.89 EPS on $39.55 billion revenue. Both banks were supported by the higher interest rates that boosted their net interest income, the difference between what they earn on loans and pay out on deposits. As PhillipCapital team, we wish you a happy weekend.